Welcome all active traders to the InsideTechnician.com and yet another segment on becoming an expert market timer and the critical importance of learning this to be able to use this intelligence and trade real-time every day on a much higher level of profitability. The time is now 7:58 a.m. on January 13th, 2015. Today I'd like to talk about the most recent market sell-off that occurred here in this case. What we do know at that time is that we had many strong negative divergences which elicit the higher probabilities, in this case, of future directional movement to the downside because of pent-up selling pressure by the smart money that had not yet taken place in the form of the future directional movement to the downside. Now, prices, as they sold off in this particular correction, had found almost exactly the previous all-time high area broadcasted out into the future as the real support area where prices halted. Now, this is not a coincidence because we do know that prices will find support resistance areas as end targets to the downside in many cases. Now, as we look at the current levels and view the prices that are associated with them, marked to the market on ES near contract month 3/2015, current prices are trading marked to the market at 2030 and 75, approximately 2030, 75, 2030, 50 now. We know that resistance was held at 2055, which was laid out by this open here at this point. Closed, open just below, and then traded through the 2044 area for an additional confirmation to be short with a great move, a free and clear from here all the way down to this level right here, which was extrapolated from these prices broadcasted out into the future at 2031 and 25. The next level to the downside for a real target existed from 2031-25 all the way down to this price broadcasted out, laid out well in advance at 2024. Yesterday's move on the short side was one of the most profitable days that any trader could have ever asked for. And as you can see now, prices are basically contained within a channel from 2031-25 to 2024 to the downside on the most recent open and where prices are trading now marked to the market at 2031. The overall bias for the U.S. markets at this time, in accordance with the smart money bias market trading call, which is specific to the InsideTechnician.com, is clearly to the downside. Right now, we are at a short level 6, although today's action is encased within the channel and trading at net neutral. The reason for this is because of so many indicator setups, including the short-term smart money tracker, money flow index, based on yesterday's action, had already traded through an existing support level and confirmed that prices should be trading down. At this point, the trendline violation to the downside and the continued momentum here clearly suggests that prices will more than likely be trading down at least for the next few sessions in our favor for short setups. Shaken money flow here at this point within the channel, no up movement just yet. So although now prices are trading at 2032, flat mark to the market, and according to our lagging indicator, the MACD, after the strong negative divergence here, which was long before the market sell-off that we predicted, that you'll see on one of the previous YouTube videos, that the trend is still intact to the downside. The disparity is fairly wide between the MACD and the signal line, and the strength to the downside is much greater than any other environment at this time. Stochastic's momentum after a strong negative divergence here, midway at neutral, but the cross is intact to the downside. Getting back to the levels for just a moment here. The next support level to the downside to get through for a major move is going to be 2019.50, and then you have a free and clear all the way down to 2008 and 25. Below that 2008-25 mark would be 1994.50. Now, if prices trade down sharply and continue to move and get through the most recent major area, which is here at 1994 and 50, the odds are that prices will continue to trade all the way down to this area at 1965 flat. And this is the most major support level that exists below here at this area right now. Now, there are no 100% in trading. Anybody who has traded for even a short period of time, you know this. We know this very well. But what we do know for sure, based on the historical documented profitability, over 100 trades posted to YouTube, that without a doubt, we have, and we will continue to, be able to determine what are the higher probabilities, where should we be looking at trading today and possibly tomorrow. This is what a true professional can do as an independent, singular person. Learning how to do this is critical to your profitability in real time. The daily levels, as they're laid out here, are some of the most important intelligence, and combining these with the indicator formations before you trade will help you tremendously in your real-time trading. Let's get into the real-time charts here for just a minute. I want to reference the 15-minute chart with the MFI. Now, at this time, this is where prices had traded up to the 2047.75 resistance level. There was a channel that was established between here at 2044.50 and the 2047.75, again laid out by this exact price area, very close to this area here. A minor adjustment only had to be made to accommodate the most recent prices that had established that new resistance level. The early trendline violation here was a clear advance warning that prices could start to turn back around after hitting this resistance level associated with this price point. The secondary trendline violation here at this point clearly laid out the path after prices crossed through the floor shortly after for the move to the downside to be taken. Now, a lot of traders might have gotten in early here, but it's clear, according to this methodology, where this bar closed at 8 a.m. Eastern Standard Time yesterday, that we were not short. We were not short, not cleared to be short, until around the 8:03 one-minute bar. Obviously, prices at that time, as well as many of the indicators confirming that they should move down, in fact did, and all the way down to 2036.50, which was laid out by these prices at this point. This is just one of the ways to determine a high probability trade set up in real time and used in conjunction with the daily levels, especially the resistance level that was associated at around 2047.75, and here, obviously, to the upside at the higher level, located right here at 2050 here. Prices can and do move through and to other levels fully orchestrated in advance by the smart money. These are the people who have the largest pockets in the world today. They know exactly what their intentions are for the trading session well ahead of time. These unions that exist between these people, the Soroses, the Rothschilds of the marketplace, are the ones that will create the moves at the time by pumping in an incredible amount of volume in order to trade through levels like 2036.50, 2033, and begin to move the prices strongly in the anticipated direction. Your job as a true professional, your opportunity to learn how to do this, exists at the Inside Technician. We welcome you in 2015 to becoming not an average trader, but a superior trader, changing the guard from average profitability into a highly profitable real-time trader every single day. It's been my pleasure to present for the very first time the actual crossing of the bridge from end-of-day analysis into real-time trading, and reveal something that I have never before to the public on this YouTube channel. All the best to all of you and all your success in 2015. For more information on any of our course material and our executive mentorship program, our highly selective executive mentorship program, you can contact us through the website. We'll see you on the next profitable trade.